Hi, I'm Michael Quinnett, Chairman of Westwits Mining Limited, ASX WWI. We're a company that's working on an exciting gold project going into production on the Wits Basin in Johannesburg on the old Durban-Roodenport Deep Mine. And we've also got some exciting exploration ground in West Australia in the Patterson Range near the Winu Rio project.
Michael, lovely to meet you. We've not spoken or met before today, so thanks for coming on the show and sharing your story with us. We can have a romp through this, fairly high level because it's new, and
Sure.
maybe perhaps if you come back on, we can get stuck into the detail. Can you give me a bit of background on you? What's your story?
Oh, way back, I'm a lawyer by profession, Matt, and obviously in Australia, being an Australian lawyer working in securities market, ended up working for a lot of exploration and mining companies and other companies. Worked for the ASX for 3 years, came back into private practice and got heavily involved more and more in mining until someone asked me in 2007 to take on the chairmanship of this company. So that's pretty much in a nutshell my background. So I've had a sort of a varied background in securities law, but also hands-on in listed companies.
Okay, and ably supported by who? Who's the kind of core team or active versus just nameplate?
Well, when we got this thing past sort of more the legal permitting stage a few years ago, I decided it was time to get someone who actually could run and build a mine into the company. So we recruited Jaap van Heerden, who's a South African mining engineer who's had a lot of experience. He's about 45. He's really ready to take the next step in his career. Worked for all the majors through Africa and running large mines, and he's come on board about 2.5-3 years ago. And he's the man now running the actual project in Johannesburg.
Right. You mentioned that you're operating in 2 jurisdictions. You mentioned in Western Australia, the Patterson Range. That's a farm out. Do you want to just give us the kind of basic outline of that so we can sort of park that up and get on to the kind of matter at hand?
Sure. We picked up a lease there before the area became hot in the Patterson Range there in the Eastern Pilbara. We picked that up about 3 or 4 years ago. We did some studies on it. We did some aeromags on it, and we've come up with 6 or 7 really hot targets on it. During that phase of during that happening, Rio ended up discovering its Winu prospect. And after a few more backwards and forwards, we've ended up last year entering into a JV farming with Rio. So Rio basically surround our tenement, which is 125 square kilometres in that area, and they've decided they want to drill our target. So that's a 2-stage program that could end up having about $10 million worth spent on it to take an 80% interest. So we've parked that in Rio's capable hands, and we're really focused now on South Africa.
So give me that again. So they've got a commitment to spend $10 million on. Did you get any financial benefit from it? Cash up front?
Well, we were paid $150,000 sign-on fee. We get another $250,000 in stage 2, but it's not a commitment. It's an amount that if they spend the stage 1 $4 million they have to spend now to earn 51%. If they go to that and want to keep going, then they spend another $6 million to earn the balance to go to 80%.
Got it. Okay, fine. Okay, so that's
pretty sort of traditional Australian farming agreement.
Gotcha. Yeah, of course. So that's got a way to run. And then with the 20% that you would be left with, are you carried on any of that, or would you have to pay your way?
We're carried to decision to mine.
Brilliant. So, Okay. So that's good news. So let me just go, if we can just park that up, if you don't mind, because I think there's some value attributed to that, or should be attributed to that. I don't know what it is, and I don't even know if you know what it is. But
it's one of those things, Matt, where it's either worth a lot of money or it's worth nothing. We don't know until they put a drill rig through. Their commitment as part of the deal is they have to do about 900 metres of drilling this year. So they're setting up to start that drilling soon, and so we should know sometime in the next 4 or 5 months, if things go well, what's happening there.
That's interesting. So that's not a whole lot of drilling, is it? Sort of shallow stuff, is it?
No, that's just for year 1, and they're going to put a few test holes into some of the targets we've got. They can spend more. I mean, they've got 4 years to spend the $4 million. So
right. Okay.
Part of the agreement, though, we didn't want them to sit on it for 2 or 3 years, so we put into the contract that they had to spend this much, or they had to do this physical drilling this year. So they are doing that.
I guess they're sort of intrigued. So what's the size of that land package?
It's 125 square kilometres.
And how much do they own around you?
Oh, they own basically around, pretty much 3 sides of us, to the east, the north, and the west is all of them. I mean, we're sitting about 70 kilometres west of the Winu find. So in terms, 70 kilometres sounds a long way to some people, but in Australia, Pilbara, it's very short distance.
Yeah. Okay. So I guess working on this, your property could inform what they potentially could see on the rest of their property. So, okay, that sounds like a nice marriage of convenience for now. But like I said, let's park it up for now. Let's go to South Africa. Now, South Africa is a funny one because some people like it, some people don't. It's got a long history of mining gold, underground, above ground. It's a good place to do business. Or it can be a good place to do business in terms of what you find in the ground. Is it a good place to do business operationally?
Yeah, I believe so. I mean, particularly in the mining industry, I mean, the first thing we look for is, have we got the expertise and the equipment and the people there? And of course we have. I mean, Johannesburg, where we're situated, is basically the central, downtown central of mining in Africa. I mean, every sort of reputable firm is there, every reputable professional advisor is there. Everything comes through there in terms of the mining industry virtually. So I think we're well placed there. I also think that, South Africa has a very good legal system. I think sometimes the bureaucracy is a bit lacking, as it is in Africa in most places, but the legal system is very good. And we've had a good experience with using that when we've had to get what we need.
And unions, recruitment, all of that side of things, what's that like?
Sure. I mean, unions, we're not unionised at this point. We're contracted out, but we haven't had any issues. I think you've got to get to a certain size before you sort of hit that issue. The unions are active there, but they're coming off a very low base. So some of the demands they're making probably in a world context are pretty reasonable. And I think, most of the majors, Harmony, which is mining next door to us, Harmony Gold has sorted all their issues out and have a fairly harmonious relationship with their union. So I don't foresee any major issues there, or certainly no material difference to anywhere in the world, really.
Right. Okay. So let's look at the project, because it can be confusing, because you talk about 4 phases, and you've got you've got a feasibility on some of it, and you've got some economics on some of it.
Sure.
So can you kind of give us kind of like the highlights to people and go, well, what should we be looking at first, and then we'll talk about maybe what could be to come.
I think what we first look at is what's really de-risked here in our view is that we have a very well understood geological deposit. This is a mine that operated until 20 years ago. This immediate area around Johannesburg has produced something like 28 to 30% of the world's known gold to date. So we're talking about a very well understood. We're not going to go short of gold here. We already have a 4.28 million ounce resource, and we've really only scratched the surface on that in some ways. So that's the first thing we look at. Then in terms of how we mine it, the way this resource presents, it's in concentric outcropping reefs. The really rich reefs in the northern part of our lease have been mined extensively over a long period of time. People, the old timers, they pulled out of this particular historical. It makes up 2 historical mines that make up our lease, our mining right. They produced 41 million ounces of gold. So a lot of gold came out of these northern reefs, which are the Main Reef, Leader, and South Reef. What we're focusing on is the reefs further to the south, the Kimberley Reef and the Bird Reef, with some Main Reef left, but most of our project is based on the Kimberley Reefs. The Kimberley Reefs sit about 2 kilometres south of the Main Reef, and they were virtually untouched. I mean, there's bits and pieces of them have been mined over the years, but they were left alone because they pretty much run at about 3 to 5 grams a tonne, which when you're comparing to South Reef and Main Reef was running at 15 to 20 grams a tonne, wasn't that interesting to the old fellows, but in the modern context, it's clearly a very interesting deposit. What we find though is the way these reefs present, they are almost uninterrupted, 1 to 1.5 meters thick. There's concentric bands within each reef package, and you sort of have a very, it's very predictable what you're mining. So what we sat down and did was we said, well, what's the best way to attack this? And we thought, well, the best way is to do it in stages. And we're a small company. We don't want to bite off too much too soon. We want to show people that we can walk before we run. So that's the way we've planned it out.
Okay, so you're right. I mean, you're a small company, 65, 70 million market cap. And I think, I think the share price has come off a bit. I'm sort of intrigued as to why you think that might be. Is it a South Africa factor? Is it the gold equities haven't really responded to the gold price movements? I mean, where's your head at on that?
Well, it surprised me. I mean, if you look at our fundamentals, and as you said, we've released a definitive feasibility on stage 1 of the project, which is a big chunk of the project. It's probably 70% of the project. And we've released a scoping study on the whole project that showed very robust economics. So if you're looking at it from an objective, fundamental, financial point of view, it's definitely, the stock price is below where it should be. I don't think many people would argue with that if you look at the numbers. So you have to sort of look for other reasons. I think part of it has been the South Africa. Some people, particularly in Australia, have a bit of a negative perception of South Africa. It's a perception. It's not necessarily that they've had any direct experience. It's just a perception that runs through. And I think also, like all stocks in our position, when we're transitioning from exploration, fizz and bubble and into production, there's a bit of trading going on the announcements, and I think there's a fair bit of people in and out of our stock that are looking for quick share price movements rather than actually looking for long-term fundamentals. So that's probably explaining. I don't know. I think none of us really know, but that's what we have strong volumes. So I think that sort of indicates to some degree that we're being traded a lot.
So I guess it's going to be down to you to actually, try and promote that narrative that this is a fundamentals story, right? So let's dig into. Like I said, I do want to keep this fairly high level because it's the first time we've spoken, but let's kind of dig into that component a bit, which is if I look at some of the numbers that you presented, with your financial modeling around 1750, it's you've got free cash flow, over $500 million. The NPV 5 is, what is it, 225, 230 million, something like that. And the IRR was sort of post-tax 29%. So it's solid enough, right? It's solid enough. But I'm interested in the model that you're proposing to do, because it's a very Aussie one. So like North American audience or European audience perhaps don't see this a lot, which is let's get into production early to, one, I guess, reduce dilution going forward for shareholders, but to kind of like proof of concept in a way. I mean, so what were the options on the table, and why have you gone that route?
Well, I think the other way to do it would have been to get our mining rights sorted and then sit down and go effectively on to care and maintenance till we sorted out all of the funding and all of the issues, and that's the conservative way to go, and it's certainly an option we looked at hard. I think the other part of it was that we thought, well, we sat down and talked about it, and myself and Yark, and we decided, well, we've got some key players around us. We've got Harmony Gold operating at the Doornkop mine next door to us, in effect. We've got Sibanye down the road. We've got other people coming back into the area, Pan African and others that are looking at the area. And we thought, well, our plan is not to build a plant. We want to take the ore and process it. There's plenty of capacity in the area. At the moment, we have a fairly small toll treat agreement that'll see us through for the next year or two if we need to, with a British-based company, an AIM-listed company that's operating a plant in the area, and that's a deal that we have. But longer term, we see a bigger picture where we can actually expand this whole thing. This is our base case that we've done in the scoping study and the DFS. So we see ourselves as wanting to work with the bigger companies in the area who have excess capacity and are depleting some of their resources and reserves. So that was why we took I suppose some would say the gamble. We took the impetus of saying, let's get started and show that we're serious about it. Because, the thing with big companies, if you go to them and start talking to them, most of them are going to say, come back to me when you're mining. You're the little kid in the room. They're not going to listen to you. But if you say we are mining, we've actually opened up and we've started, we've raised some money, we're going, do you want to come and look at this seriously? I think you get a lot more attention, particularly in South Africa, where there's a fairly sort of, sort of a masculine approach, I suppose I'd say, to how things are done. So that has been successful to the extent that it's resulted in those companies taking notice, and we're in discussions with 3 of them at the moment about what we might do. So it's too early to sort of go further than that, but I think that was the reason why we've started early.
Right, and does that, in terms of the economics around that, can you give some sort of indication of where your expectation of that kind of phase 1 approach will do? Is it literally a case of we think we can wipe our nose with this one? We'll cover our G&A, we'll cover our OPEX, and it will allow us to kind of rectify some of the issues for the next phases. Is that really the purpose of it?
It's going, as I said, as you indicated, in stages. At the moment, we are mining, we're extracting ore, but the ore we're extracting at the moment is effectively remnant material that was left their
Oh,
in
okay.
situ mine closed. So this is not in our mine plan. It's not in the formal mine plan that forms part of our DFS or our scoping study. So this is a bonus mining at the moment, which we're doing as a platform to show proof of concept and where we're going. So it's relatively small scale. We have a relatively small scale toll treating agreement in place, and that's what we're working to. Now, that will run, we think, for the next 6 to 8, 9 months. And during that time, we expect to actually resolve all our funding issues and resolve a longer term deal with one or two of the majors. And so that's our strategy.
Okay, so on the money, so obviously you're looking at sorting out your financing, which we'll come on to in a second, but you're looking at 5 to 8,500 tons of ore per month for 6 to 9 months. What does that do for you in terms of cash flow? I'm not quite sure of the grades or the tolling agreement.
It's not in a study, so I can't. Well, it's in internal studies. It's not in a release study. So, but if you work out that we're sort of running at 3 to 4 grams a ton, run of mine 3.5, you can work out what we're expecting. The recoveries are about 92%. People can sort of, it's not a lot, but it's not insignificant. It's material for a company our size.
And tolling agreements typically in the region, they would do. How do they charge you?
They charge usually by ton. So that, and then you'll have a gold allocation. So we've toll treated there before. We did some cleanup projects there previously on open pit material about 2 or 3 years ago. We ran for about 2 years on that, and we've toll treated with Sibanye before at their plant down the road. So we sort of well understand how their toll treating works. It's all costed into our studies. All that cost of treatment is in our studies.
Right. Okay.
Based on quoted toll treat arrangements.
Okay. We can take some. We can take that and maybe do some simple math and try and work out what that could contribute. With regards to the other things that you need to do in the meantime, which is obviously get the finances in place. So what are you looking to raise? What's it for? And where are you in that process at the moment? Okay.
Well, we've launched stage. The funding request at the moment is in relation to stage 1, which we call Koala Shallows, which is the subject of a full DFS. So that shows a requirement of $50 million US over a period of 3 or 4 years to get it into full production. So that's what we're aiming for in terms of our current funding round. We've engaged a local. We actually did a beauty parade of about 4 or 5 consultants, and we've selected a local group called Torum Capital, who are based in Cape Town. They've come very highly recommended, and I've been very impressed with them. They have sort of gone through, done the diagnostic on the DFS, got the company, if you like, finance fit to be presented. But what we're doing at the moment is just filling in some contractual and other arrangements, particularly on the toll treat, before we go and formally start soliciting offers of finance. We've had a few unsolicited offers, quite a few streaming companies and others have come to us once they know of the project. But what we're trying to do is present this in the most professional and de-risked way so that we get the best tier 1 funding we can obtain. So that's what we're in the process of doing. The aim is to have that sort of done in the next couple of months.
Okay, so $50 million, and what's your expectation in terms of the return on capital on that?
Well, it's in the DFS, but it's 30 to, I haven't got the figure right in front of me, but it's 33 to 46% depending on the gold price and so forth. So yeah.
Okay.
I mean,
And then so that's a kind of phase 1. Like I said, there's fairly helicopter stuff at the moment. But when you then move down into the main reef package at phase 2 and Bird Reef East phase 3 and Koala Deep stage 4. I mean, what sort of time frame are we talking about building this out? Because you've got some quite sort of high expectations of what this can do for you. Up to 85 or 95,000 ounces potentially.
Yeah, but we've actually got higher target. That's our basic study at the moment. I mean, and that rolls over the next 4 or 5 years to full production. I mean, some of those second and third stages we want to complete the DFS on. We haven't done them, but we can do that while we're starting on phase 1. So it sort of just keeps rolling on. But what we're also looking at is just to explain that too, in terms of CapEx, when we go to the full phase, the scoping study shows that the requirement is 80 million. So it doesn't go up a lot more. It's 70 to 80 million. It doesn't go up a lot more because a lot of the work we're doing now, for example, on Koala Shallows, establishing the site, and that all works for 2 of the other stages. Koala Deeps is essentially which we're calling stage 4, is essentially just a deeper extension of Koala Shallows. We're going on the same reef system from 8, instead we're going down to 800 metres in stage 1. So it's just an arbitrary cut-off that in terms of depth. But the actual infrastructure, once we get to deplete Koala Shallows, we will be at Koala Deeps. So it's not, so that's, and the other areas, Bird Reef East, we're intending to actually service that through the same adit that we're doing Koala Shallows through, which by building a drive going north. The only discrete area we'll open up on its own would be the main reef area, and that's got an existing shaft we refurbished. So the CapEx doesn't go from like 50 million to 150 million. It goes from 50 million to 70, 75, 80. I think it's actually 70 million US. I'm getting mixed up with Australian dollars. So it's not a big jump forward for the full project. So I suppose, and then what we're also looking at, and we've sort of started to articulate to the market, is that we think with this ore body, we're trying to say to people, look, this is the base case. We want to do a base case to see how can we build a robust mine that won't fail. So we've built that and put that in the DFS and the scoping study. What we're doing now is saying we've got, as I said earlier, a 4.28 million ounce resource in JORC now. And this mine closed 20 years ago under old JORC. It was listed on the ASX at that time, the company that had it. It had a JORC resource of 12.8 million ounces. So, there's a lot of gold here that we can, what we're saying is, look, this probably deserves to go and be exploited in a lot more accelerated fashion. So we call it Project 200, and we're saying, well, let's now start doing studies on seeing how we can really grow this thing into a much bigger beast a lot quicker, now that we've got the base case taken care of.
Okay, so I understand the what do you think the blue sky is there? So the question I asked earlier was just around timing as well. I don't know if you can maybe help me understand that, because you're starting to tell a story of strong fundamentals. I just want to understand how long I've got to wait for the various phases and stages to Project 200 gets delivered.
It's 2 years till we get to steady state at 25,000 ounces a year. Then it's really 4 years before we get to that sort of 50, 60,000 ounces a year. So it's got a fairly slow build up, and people, compared to say people in Australia are looking at open pits that are opened and mined within months. We had a few open pits in this plan, but we got rid of them because it was too much issues with our interacting with our local community. We're in a populated area, so the open pits caused a problem, so we decided to not pursue them. That was the original strategy. So it does take a bit of time to get into it. And what I'm trying to make sure people keep in context is it's an old mine, Matt, but you can imagine, because we're attacking a whole untouched ore body, and we're doing it through creation of a water pillar to avoid the existing water flooding in the area, we're actually creating a new mine within an old mine. We are. So the development work that we're doing, but then we'll provide the platform and go forward position for a 27-year life of mine. I mean, this is not an 8-year pit, this is a thing that goes for 27 years on the current plan. So, and it's got that depletes 1.6 million ounces of gold, and we've already got 4.2. So you can see there's plenty of scope to improve that. But that, and I think in looking at our NPVs again, to put it in context, and I know you're an ex-banker, so you'll probably cane me for this, but in doing those models, you get no credit really for things past year 9, 10, right? So we've got a sort of 17 years of mining in our future, which the Chinese, I'm sure, would have a good look at, but which under our models, we get no credit for at all. Whereas if we were doing a pit in Australia that was going for 8 years, we'd get every year of that would be effectively a material contribution to the NPV. So I'm not trying to get too technical on it, but you know what I'm saying. It's
a tough balance. We want a long life of mine, but we won't give you credit for the tail end.
Yes. I suppose
we want everything.
Also tack onto that the fact that we've got a little bit of a bigger lead time than what they're used to, say, in Australia, in our home market. It's but if you're a long-term investor and see this as a long-term investment, or I use the Chinese example, but if you're not looking just for that short-term stuff, but a long-term sustainable mine, we're not going to run out of ore in 8 years. We're going to be going for a long time. So That's what this opportunity presents.
So I guess it's two things. Again, banker hat on here, which is the ramp-up period, as you currently state, is steady, right? It's steady. It's not ambitious. There's no aggression there, So in 4 years' time, 50,000 ounces, it's interesting because you'd be throwing off cash, but it doesn't suggest ambition. And I think that would be something that I would personally be keen to see if you can give not just a base case, but a kind of, a higher case option there as well. See, could you ramp it up any quicker? What would the economics in terms of the capex requirement be if you were to be a little bit more aggressive, okay? And then the second component that kind of comes in is like, how do you deal with the issue of the fact that surrounding houses and town and people in terms of
Sure.
I guess job creation, brilliant. In terms of taxes locally, brilliant. But it's a kind of residential urban setting wrapped around you, or wrapped around this old mine. You're going to have to deal with those sorts of issues. And I know you mentioned Sibanye there, and they're very strong on rehabilitation and remediation. As well, but so how are you presenting? How are you having those conversations at the moment to ensure that
it's been a long-term process. I mean, we've been involved heavily for 3 years in that since we lodged the mining right application, because part of the mining right process is you must show full and comprehensive engagement, interaction with your stakeholders, and here clearly the communities are the key stakeholders. So we are well advanced in that. We have a full-time community liaison person who works on that, and she's been great. We have, as part of our mining right application, we have built a social labour plan, which has been ticked off by the local authorities and by the community groups. We have 30% plus BEE ownership in the company. So there's a lot of things that we do to actually continue that process. And in terms of the actual physical position, I think it's also important to appreciate, we're not sitting in the middle of what you would think in Australia or the UK or the US as a suburb. I mean, what's happened in Johannesburg is you have this mine, the run of the reefs runs right through the southern part of what is now Johannesburg. It runs for about 80 kilometres. And in that area where they mined, there's probably a 2 to 3 kilometre sort of gap where there's not much at all, because that's where all the mine works were and all the shafts were. And then you've got where we are, you've got Soweto to the south where a lot of the mine workers were living, and into the north you've got Rudaport. So we're close, but we're not right on top of them. We're sitting in a pretty much old, dilapidated area for mining, where we're taking up a 16 hectare footprint and we're going underground. We're not doing anything above the ground. So we're not processing in the area, and we're simply mining under them, pretty much. So it's, we're sitting in our particular location about 200 metres from, believe it or not, an explosives factory that we get our explosives from, which is actually running daily explosive tests. We're sitting 50 to 100 metres north of a major tailings dam, which must be 20 or 30,000 tonnes, which is blowing dust. We're not in the middle of a kindergarten. We are sort of in a heavily sort of, I suppose you'd say, industrialised area. So yes, we do, but we do have in proximity, those sort of groups. So when our mining footprint takes up a big area, we have to interact with all those people, and we have. So we think we've successfully navigated that. We've sponsored various things, education programs, all sorts of things, as you'd expect.
And so what else? What are you waiting for? What's the outstanding piece of paper that you're waiting for, which allows you to move forward with regards to that component?
Nothing. We have the mining right in place. We have the environmental authorization. We have the social labour plan. We're just going for the funding now. That's we've ticked all the boxes with respect to the regulatory requirements.
Okay, so let's come back to the first bit of that question, which was around the sort of scale of the ambition. You've got a base case. First 2 years, 25,000 ounces a year. By year 4, 50,000 ounces a year. Is there a more aggressive plan coming?
There is, and I think this came about because, as I said, we sat down with my MD mining engineer and decided we better build, a robust case, which we've done. I mean, engineers, I suppose, as you know, we both know, they're conservative by nature. I suppose that's why they design bridges and things. You don't want them to fall down. So Jaak has built a lot of tolerance into his plans. And then those who are more market focused on the board, including we've got 2 investment bankers on the board, as non-execs have said, well, you've got a great resource. What else is possible here? So that's why we've gone to this project. They've been the impetus for that. Jaak's been very enthusiastic on it, and we're now working on that. But that's not yet in a study. It's in an internal study. but that's what we intend to pursue in the next sort of 6 months and tell the market what we think is possible.
Right. Okay.
I mean, that's the question. The question you ask yourself is, okay, we've got this mine design done, we've got our funding sort of requirements identified, but what if you had more money? What could you do? Now, if you're sitting there on a small resource where you've got there's not much you can do, you can just hope that you find some more. We've got the gold. So, that's the other thing we've got, which I might mention. I don't want to sort of go off track here, but, there's a fifth stage of this project that we dropped out of the final plans because the gold was seen to be a bit too marginal. But then we realized we also had uranium in this area. So we've actually, in the Bird Reef Central Zone, which we dropped out of the mine plan, we've dusted off the uranium drilling we did some years ago, and we've reissued a 12 to 16 million pound uranium target under JORC on that. And it's sitting next to the Bird Reef gold-bearing reefs, which have 2.5, 3 gram gold and a little bit marginal on its own, but with the uranium that could. So we're also looking at what we do with that, because that could be a whole new project on its own, independent of the gold mine.
Yeah, and I get the excitement around uranium at the moment, and obviously the spot price moving and all sorts of geopolitical shenanigans. The expectation is it goes higher. But what do you know about that? Because you talk about a 2012 JORC on that, I think. So what sort of?
It didn't go to JORC. We didn't. We stopped drilling because Fukushima happened. And we
2011. Yeah. Okay.
Yeah, and so we didn't go further with it. And to be honest, we left these leases alone for about 5 years and did other stuff. And it was only when the uranium market starts to fire up again last year, I was the one who'd been there the whole time. So actually, we do have a lot of uranium results. We did a study with MSA years ago, so we dusted that off, got the material out, and we're now planning another infill drilling program to put that into an inferred resource. So but we haven't committed to it yet, but that's the plan. We'll put it into a resource, and then we'll see, well, does it justify doing more with it? I mean, people forget too, South Africa doesn't produce much uranium at the moment, but it used to produce a hell of a lot of uranium. So in fact, when I first inherited these leases, they had nuclear permits on them. They had the radiation permits in place. So it's something that we're not just coming in saying, oh, we might have uranium. We know we do have uranium in the Bird Reef. The Bird Reef further west to us on the old leases we had at Randfontein, which we don't have anymore, those leases, which have the same structure running through them, being this Bird Reef package, they produce 37 million pounds of uranium, since the 1950s through to the 1990s. So there's a lot. This is a real uranium area.
Oh, that's really interesting. Really, 37 million pounds. Wow. Yeah. Okay.
Yeah.
So sorry, correct myself then. So there's no JORC on it. This is just an exploration target.
It's what we call. It's not what we now call in JORC an exploration target. So it's not nothing. You can't release an exploration target unless you have some justification for doing it, and the geologist has to sign off on it. And it's not just drilling results. It actually is in a target. So that means there's got some reasonable expectation that it will convert to some sort of resource.
Okay, that's interesting. I'd love to come back to that one. We've got a big uranium following on here. That's always intriguing, given what's going on.
Just always trying to remember to put the uranium part in, because we do have it, but it's not the main.
No, for sure. Hey, well, look, Michael, I appreciate the overview there. That's it's kind of interesting to me how you're going about it, the model, and obviously you've got some numbers as well, which gives us a sense of what it could be as this thing starts to roll out. But appreciate your time today. Do come back on and keep us up to date with how it's progressing, certainly with the funding component and the timing of the rest of the plan. So appreciate your time. Thank you.
Thanks, Matt. Just to close, a couple of thoughts I wanted to leave you with was, just the key factors in West Wits, or the key things to look at. I mean, one, we're going into production. We've got a DFS that shows us having a 27-year life of mine in a great growing gold environment where gold is looking pretty strong. We've got on the same property, we've got a separate uranium target that looks like it could be standalone on its own. We also have an exciting prospect in West Australia with Mount Cecilia in the Patterson Range, right next door to Winu, one of the most exciting discoveries in recent times, now being drilled by the people who discovered that, Rio, one of the biggest companies in the world. So I think there's a lot to look forward to with West Wits, and I hope you guys keep an eye on us.